So this is the part of the show where I talk about what I believe is important for individual investors to consider before they make their decisions or investment decisions over the next couple of weeks. We're going to touch on economic data, and I guess that would be in relation to the Fed. What does the Federal Reserve think about economic data that has already been released and to come? We're going to talk a bit about corporate speak or corporate announcements. What are corporations saying? What are CEOs saying about their companies? And lastly, government bond rates. Government bond rates, especially in the US Treasury rates, have become so important to how this market is moving up or down. You want to know how the market's doing on any given day? Take a look at a 2-year government of US bond, and that'll pretty much tell you what's going on. So those are the 3 things that I think you should consider over the next 5 to 10 business days. So let's delve into it a little bit more. Economic data. We're going to get a lot of economic data over the next couple of weeks. We're going to receive information on inflation. That seems to be the big one, obviously. CPI, PPI, PCE, all these different measures that we all look at to see how inflation is going, especially in the US, but also here in Canada. We know, and I've said this many times, that the economic data in the US seems to matter a lot more than our economic data, unfortunately. Our data seems to move the Canadian dollar, but not really our stock market. Also keep in mind that what is bad is good for the markets, and what is good, unfortunately, is bad. And I've said that a lot of the time, and that seems to be continuing. We continue to see resilient economic data out of the US. We just received some Michigan confidence numbers this week. They were one of the lowest numbers we've ever seen. Good for the market because it was bad data. But then we saw some other confidence numbers and some housing data that were relatively good. So the market then dropped shortly thereafter. So economic data and what the Fed interprets or says about this economic data, especially jobs data that will come out, I guess, shortly for September. We'll find out what happened with jobs for the month of September. That's going to be crucial in how the Fed reacts, whether they raise rates, continue to raise rates aggressively or not. And again, that will affect the stock market. So corporate data or economic data and the Fed are utmost important. The second point that I want individual investors to consider before they make their investment decisions is what corporations are saying. What are CEOs saying? I saw an interesting interview this past, I think it was about a week and a half ago, maybe a little less. I think CEOs were being interviewed. I think on CNBC, they were talking a bit about how they see their business as growing. Skyworks Solutions was one of the names in the semiconductor space. They make chips, as well as Marvell. They make chips. They were talking a bit about how they see a huge growth potential in their business, and they're still growing quite well. And you can see here, Skyworks Solutions, how much the stock has fallen over the past, let's call it few years. And you can see it's, once was a lot higher, over $150 a share, now trading well below 100. Marvell, same thing. It was up in the 80, 90 range, and now it's trading in the $40 range, so cut in half. And these are companies that I think are at the forefront of innovation. They're the tech names. They provide the chips for everything out there. AMD, another name that has come out and continue to have good corporate earnings, yet their stock has been cut in half, more than cut in half, down from about $160 a share. Their stock price is in the high 60s today. On the flip side, you're hearing other corporations talk a bit about how things are slowing, how they have to lay off workers or at least freeze hiring. We're hearing a number of corporations speak a bit about that. Companies in the cryptocurrency have laid off a lot of individuals. We're hearing companies like Google and Microsoft. And even today, we're hearing about Apple, how their iPhone 14, they're slowing down production because demand seems to be waning. So overall, I think it's very important to understand what these corporations are saying and factor that into your investment decisions going forward. The third and final point I wanted to make with regards to what individual investors should be focused on to find out the direction of the stock market, it's one that people might find a little confusing and not so sure about. And this is the bond market. we don't speak often about the bond market here on our show. We talk about having a diversified portfolio and owning bonds, government bonds like on your screen there, or corporate bonds. But right now, I'm referring to more government bonds, US government bonds, the 2-year rate, the 5-year rate, the 10-year rate. These are bond rates that have just shot up. The 10-year government bond right now is just touched 4%, has gone down below that today, which is why possibly the stock market is rallying quite strongly today. But if you were to look at the 2-year, the 2-year coming into 2022 is just above zero. I think it was like a quarter point or 0.3% in the US, and it's gone well over 4% now. And this is on the back of the Federal Reserve continuously raising rates and aggressively raising rates. As we know, the market doesn't like when rates go higher. So every time we see the 2-year or the 10-year start to spike higher, that is a signal or a negative signal for the stock market. So when you wake up in the morning, you want to know how the market's going to fare today, have a look at what US government bond rates are doing. That will give you a pretty good indication if today is going to be a struggle or a good day in the markets.